Hey everyone. So I just wanted to come on here and talk a little bit about what's going on with rates. Mortgage rates are going up. A lot of people are asking, and we're seeing all kinds of internet activity, people concerned about what's happening and how it's going to affect the market in the long run. So let's just talk about it a little bit so you can kind of get a feel for what's the future of mortgage rates. Well, they're going to go up. They're going to go up for a little while, partially because the Fed's finally addressing inflation. So because they're addressing inflation and finally making some moves on it, you're going to see an increase in interest rates overall. Now, the mortgage rates traditionally, if you look in the past, they kind of go with inflation. So if inflation is going up, then you're going to see higher rates. And once we get inflation under control, the rates are going to come back down. So that's what's happening. So the inflation being at 7.5%, which is quite high, they are needing to adjust the cost of funds. So by adjusting the cost of funds, pushing the rate up for everybody, not just mortgage, it's just the cost of borrowing money in general, that will help curb pricing. Because if everything's cheap, then of course it's going to continue to go up and you'll have more and more inflation, and over time you'll have hyperinflation if you're not careful. So that's why they're addressing rates like they are. So we are seeing mortgage rates go up. Now they're not sky high, especially when you consider where they were just 2 or 3 years ago. So they're not astronomically in a situation where you can't afford anything, but they're definitely going up. And over time, if they go up to a certain level, it can help flatten the curve a little bit on house prices, but not all the way. And here's why: because the average home buyer is about 33 years old. And if you look at the data on the people that are 33-year-old, the birth rate data, and you see the amount of homes available versus the amount of people looking for homes, they're still under supply. So there's still going to be a strong demand for houses. So therefore, the crash that a lot of people are banking on to be able to buy a home is really not there. I've just seen people wait over a year from last year, banking on a crash, but the data, when you look at the pure numbers of it, aren't going to support that. So now a year later, that home they were looking at last year is now not only costing them more in interest rate, but also in value. So your value, you could on the particular home say it's about a $30,000 increase in price, and you're talking a higher interest rate. So now the cost to purchase that home is higher. So the thing to look at here is buy when it's right for you, no matter what. So if it's right for you to buy, you buy, and try not to bank on a crash that you're hoping for. You got to look at the data. And so when you're looking at the data, you can see where house pricing is going to be and where the amount of houses that are available versus the amount of people looking for homes. So again, when you look at the birth rate data, you can see it's high. And I'll come on live again and I'll do a little presentation on that just to show you the actual data so you can see it. But the bottom line is, a year from now, we're still going to see a increase in prices and a strong demand, even with rates going up. But we are seeing rates go up. So let's just take a look at what the charts look like, just to give you an example. And so if we look over here at these, let's zoom in a little bit. This is where we are seeing a big move. These red things and green things are called candlesticks. And that's where the rates are dictated. So they move up and down. So this is where they've moved up and down during that day. So going down means that rates are going to get worse. Going up, rates are going to get better. So you can see we're in the green here. We had a huge fall off yesterday with some information that came out in the news. And that was a massive drop, huge move in the market, saw rates go up. Now we're seeing a little bit of a buyback, and we're seeing a small improvement in the interest rates. But all in all, rates are on an upward trend, as you can see. This is, even though it's going down, the yield going, this is an upward trend. And so you're seeing rates going up. Big move there. So, and it's going to continue on this little bit of a trend. So you can see from back here, we've been a slow and steady pace on an increase of rates. You can see they bounce back a little bit, and then they go worse, and they go back and forth. Now, in the long play, as we see inflation get under control, then we will see rates improve. So that's how that's going to fly. So it's watching the market, and that's what we do all day long, is we watch that. So if you're getting into the market and looking to buy something, we can help coach you through all this stuff and explain to you the data that is out there, so you understand when you're looking to buy a home is, and I'm looking for this crash, and I'm trying to judge when's the right time for me to buy a house. That's what you got to look at, is the data, to figure out what makes the most sense for you. So we will look at all of your options and take a look at your whole scenario. So I wanted to share with everybody just a little bit of information about what's going on with this market, and how everybody is really concerned that we're seeing an increase in rates. And what's this mean? Is the crash near? Everything's going to fall apart? Basically no, but you're just going to see things cost a little more. And so it's kind of a right time, especially even if you're looking at refinancing and capturing your equity is at a cheaper time, makes more sense. So if you're looking to capture your equity out of your home, and so basically doing an cash out refinance to be able to consolidate debts or do improvements or whatever, you want to look at it sooner than later because of where rates are heading. And also with rates going up more, and value will go up, but it's still going to, as things become more expensive, and if rates get a little bit on a certain level, they can actually flatline those values. That's what you want to look at and make sure that you keep that you can capture the maximum equity you want to get out of your house. Because when the equity's sitting there and you're not using it, then it's really not real money to you unless you sell the house or capture it through borrowing it back out. So anyway, if you have questions, reach out anytime. I just wanted to get out here and show everybody a little bit about what's going on in the market. And if you have questions, we're here to help. Talk to you soon.